Canberra for Cam's Mortgage Minute on Tuesday, January 29th. Well, the Kingmakers have spoken once again. Moody's, and for those of you who don't know who Moody's is, they are a credit rating agency, and on Monday they decided to downgrade the long-term credit ratings of some Canadian banks. And basically their fears are that the market is in for still a significant correction. They lowered the ratings for TD, CIBC, and Scotia, but also for National Bank and Desjardins. RBC for now seems to have been left alone, but the future, well, we'll see what happens there. Moody's is citing high levels of consumer debt and high home prices still. And these banks are all going to be under full review in the fall, and they've all been downgraded by 1 full rating point. High levels of consumer indebtedness and elevated home prices in Canada, elevated housing prices leave Canadian banks more vulnerable than in the past to downside risks. Those were the words of VP David Beattie of Moody's in that report that they released yesterday. Basically, the double whammy has raised concerns about lenders because and let's face it, lenders are the ones that drive the mortgage market over the past few years because they're the ones who are granting credit to borrowers. And they feel that now these lenders are going to be overexposed to any coming correction in home values. And some of the analysts out there are still predicting a 25% correction, and Moody's, it hasn't fallen on deaf ears with them. They've been hearing these sorts of things, and they're taking it certainly to heart, and they're worried about the long-term property values and where that's going to leave investors. Still, however, a number of investors are in no rush to sell up right now. Basically, they're pointing to the best landlord market in decades and cash flow horizons that are actually pretty bright. I mean, let's face it, with rates as low as they are and housing prices falling, if you're a landlord, it's fabulous time because you can get in for cheap, not only on the purchase side, but you can also borrow that money relatively cheap. You can lock in 10-year rates for under 4%. I mean, that's fabulous. So you know what your cash flow is, you know what your rental income is to some degree because tenants may leave and do whatever else, but you've got some control. So it would appear that the investors, while there is some that are concerned as to what's going to happen, still a chunk of them are quite happy, thank you very much, with what's going on in the marketplace. Again, Moody's, like everybody else, is predicting stuff. They're looking into their crystal ball and they're looking at all the different things that the market's pointing to. As I alluded to last week, a lot of this is going to have to do with the psychology. So when more and more of these reports come out and more people listen to this, it does become a self-fulfilling prophecy. I mean, it's no different than the guy that's on TV that's got a stock show. He tells you, hey, this stock, it's fabulous stock. You should, I guarantee, or I'm thinking about that this one's going to go up. So he's got millions of viewers. What do they all do? They go out and buy it. Guess what? It goes up. Then in a couple of months later, he says, hey, I think this stock, you know what, buy and hold, time to hold it. You might have to, it might be going down. Guess what? A whole bunch of people start selling off, price goes down. Now, I know the market's not that simple, but let's face it, the market is driven by people, and people will react in one way or the other based on the news and the information they're constantly getting. So if they're seeing headlines like this all the time, people have a concern. Now, am I saying you shouldn't be concerned? Hell no. But what I'm saying is that you need to basically pay attention for your own situation. Even in a down market, there's people who are going to make money like they always do. It is a fabulous time certainly to look at investment property. I've got a lot of first-time buyers who are now looking at trying to get into the market because the prices are pretty reasonable in their estimation. So if this works for you, or you've been contemplating making a purchase and you are looking at it as a long-term investment both for yourself, or you're just looking for a home and you want to get into something for certainly a lot of years to come, give us a call at the Auxilium team. We're always here and happy to help. It's Cam the Mortgage Man, and I will see you tomorrow, and we'll see what's cooking in the news tomorrow.